Hey, what's going on, guys? This is Terrence Ray, and I'm back at you with a weekend stock market update. Let's take a look at the weekly expected move now the last couple weeks. I think last week we had a weekly expected move of what? It was like 140 something. And I think the week before that it was similar. This week it has ramped down just a tad bit, but it's still pretty high, you know, considering what it was before we went into this down move. It's at 105. So, like anything over 100 and above is pretty big. Now, we didn't get the move. We didn't get that much last week. Last week, the expected move was what, like I think I said, what, 140 something. And you could see on Friday, Thursday, Wednesday, Tuesday, Monday, we just stayed within a range. So if you had a sold the expected move, like maybe something like that, you would have sold it, you stayed right between in there. You would have been able to keep, the premium. So I do think that we'll get something similar this week. I'm going to go through some of the top trading stocks and I'll show you this is the SPX, right? So when you're looking at the SPX, the S&P 500, you see how we kind of like made this low right here and then just chopped a little bit sideways. Now, if we look at some of the other major stocks that moved, that traded the most on Friday, their chart pattern looks similar to this, right? So you see that. Let's go look at Costco. Similar, right? So it's like it chopped around. Now it even looked like Costco. Now on Friday, we did get this big green candlestick, right? Which would make this a Harami pattern. So let me just look intraday real quick, even though I didn't plan to. So you see, that's what it looks like intraday. So I could definitely see this continuing maybe Monday or Tuesday, possibly. Not really going real far. You can see it chop get up into here, which this is a $900 stock. So $10 ain't a whole lot. So I could see it moving up into this range, maybe chopping around, doing the same thing like I think the S&P 500 would do. Now, I want you guys to notice this pattern, and then we looked at the S&P 500. We're gonna go look at the U.S. dollar. So you see the dollar went side's been going sideways. So as the dollar has been falling, the market has been moving down as well. Now, I want to show you also as the dollar has been falling. Let's go take a look at gold. Look at gold. See how gold has been trending up. Like this is a yearly chart right here. Now, if I just take all this stuff off, just so now look at it. So we can see some things that have been going on that some correlation in the or not necessarily correlation, but things that move inversely to each other, like the opposite. So like the dollar moving down, a losing stream, and then gold going up. So I'm not that's not a political statement. I'm just showing you that's literally what's been going on. So we see gold going up now. If we were to go look at Bitcoin or something like that, Bitcoin supposed to be you'll hear some Bitcoin like maximalists, like the whole point of Bitcoin is, to take some of the control away from the Fed or from governments, from having control of the money supply and being able to print whenever they want, to have some type of decentralized currency. That's the point of it. Now you can see though that Bitcoin has been selling off. Hide this. Bitcoin has been selling off while gold has been going up. So gold has been acting as a hedge for the US dollar or for overall markets, period. You can see that gold has been doing the job. So if you were somebody who was I know Peter Schiff is probably Well, he stay harping on gold, but it's actually doing the job. It's at all-time highs right now. I do believe that's an all-time high. Let's go. Let's see if I can go to a monthly 20-year. I don't even know how accurate this is, but I do believe this is an all-time high. I don't think gold has ever been this high before. Now, one of the things that I've been doing uh, is, if you've been listening for the past few weeks, you know that I've been talking about bonds, right? So I like this chart on bonds. We have the inverse head and shoulders down here, shoulder, head, shoulder, your neckline, and we just been trending higher. I do think that, in my opinion, I think that we will get something like, we got a little pattern, something going on right here. I do think that we will push higher on bonds. I think this is now the gold move. I don't know how much further we're gonna get in gold, right? It could continue to go, but I don't have, when you got something that's running like that, it's just gone. But I do think this bond position is going up and then it's going up and then pulling back and consolidating, giving you an opportunity to get in and go higher. So I do think this is the 10-year note. And so I do think that this will continue higher. Currently, I have another put spread on in here. I've been just, every time it pull back, I just throw another one on. And this is where I'm at with it. I also added a position. I don't know if I did it uh Friday or Thursday, I can't remember. But we'll look at, now this one I'm a little bit skeptical on, but I got in anyway. May have gotten in at the wrong time, but the euro. Now I did trade the micro. I think I did in the video. I had the micro somewhere when it broke out of here. I got out and then it chopped around right here. I do think that it will push higher. You can see it got up here, filled the gap, and then it chopped around. So when you see the euro looks like this, if we were to turn this chart around, this is what we would get. This is the dollar, right? I think the dollar, it now looking at this chart like right here, with it breaking this high, it's possible this dollar could run up somewhere in here before we see it find any resistance, right? Which would be bad for the trade that I just put on. But I do think that the euro will go higher. Let's go pull it back up. I do think that the euro will push higher to hit these levels up here. So now I don't have like I said, I got a put spread on it here. So it can chop around and go sideways. It got an IV rank of 64. This is a liquid future. So I'll sit with it. I got 47 days. I'll be patient and sit with this. So you can see I've been trading some of the futures because a lot of the stocks, they most of them look just like the S&P 500. So I do think that with the IV ranks where they are, I would not be a stock picker at this time trying to buy stocks. It's my opinion that the best thing to do now is to be trading like selling premium, doing stuff like selling either iron condors or strangles. I would not be, you maybe could do a put spread in Tesla, because it looked like it's on its butt. If you sold a naked put, just be careful. We do got earnings coming up on April 22nd. So if you sold anything past this April monthly, that's going to put you within the crosshairs of the earnings. I'm not I'm not certain that the market is done going down at all. I could see this market continuing to go further, not necessarily in Tesla, but I'm talking about the overall market. Because if we look at the S&P 500, we just zoom out. Let's go out like 3 years. Look, guys, I mean, that's 3 years, it's just going up. And I don't believe, this is my opinion. I think these markets are cyclical. I don't believe that this down move has anything to do with who's president or what administration is in. I've given that up like a long time ago. I don't believe in that anymore. I just think that at some point the markets will go down, just like anything else. Is nothing is going to continue to go straight in one direction. It's going to turn. It's going to go down, and then they're going to put some news out to go along with the market. That's just what I think. Every now and then, like I think that COVID um, may have had something to do with it going down at that moment, but I could even go back to the chart on COVID and show you that hey, something was going on. Just like let's go look at this is on my list. I want to talk about Pfizer. Let's look at Pfizer. You see this range that Pfizer is trading in? Let's move this drawing. See this range? Like it, so you can see Pfizer. Now this is a 3-year chart. Now, just like I showed you the overall market going up for 3 years, you can see Pfizer coming down. Now, if we go back 3 years from 25 to what, that's put you at what, 22, right? That's right around what coming out of easing out of COVID. So let's look at Pfizer, right? Now let's look at Pfizer just chopping sideways. Now we've been seeing things. I watched a headline I read something on X this morning about doctors wanting to put vaccines in chicken to try to curb the bird flu, and RFK is against it, right? But let's just look, and you see how it's just chopping sideways. Now, if I was to see the market start breaking higher and moving higher, then I would be me, or that would be the market betting on something Pfizer has. Maybe they're going to get some of these vaccines pushed out, right? And they would be making a profit on that. It would show in the market. I think the market tells you everything you need to know. I've talked about this before when I first thought that um, Donald Trump was going to win the presidency. This was, if we were to go, I'm going to shorten this up to a year. We go to right here. This is September 24th of 24. This is right around when we got real hot and heavy around debate time with the presidency. Look at Trump media just shoot up. At that time, I said, "Hey, he's gonna win." That's what in my own mind. That's what I was thinking. I was like, "He's gonna win." Then I started watching Polymarket, and once I started looking at Polymarket, they started predicting his probabilities were going up. The market was telling us the market had picked the winner. Now, don't ask me to explain it, but I just know when I come look at the chart, just me being watching bonds all year. Just I've been saying interest rates will end up coming down at some point. Then I seen a headline last week where President Trump said that he made a public statement like, "Hey, interest rates need to come down." So they're gonna come down too. If he said that they need to come down, they're gonna come down. He'll make sure that he'll do whatever he need to do, whether right or wrong, to influence the Fed to bring them down. But our goal is to, in observing the markets, is to figure out a way to make some money on them. So all in all, this week, like I said, I'm still bullish bonds. I do have a long position in the euro. It's a put spread. Um, like I said, that position I'm a little sketchy on, but we'll see. I think it's gonna go higher and touch this next level up here. I actually think it'll get all the way up here to one 1.13, right up around this range. But as we can see, we got a double top right here. So we could get a little bit more pullback here. We'll see. I have a put spread. So I think my short strike will put me right here. Right. So it's not like it could come down some more and I could be fine. And it can also imply volatility can contract and I can make money that way too. That's one of the benefits of selling premium. And so with that being said, guys, that's what I like this week. Those two. If you want to do, I think Costco has found like a intermittent bottom. So I may be looking at Costco to pop higher, maybe get a little run up into this area. I'm thinking maybe a short put spread, something like that. That's it. I wouldn't trade it and hold it long term. I wouldn't hold any stock right now long term. I just don't. I don't have any faith in any of them at this moment. Anything could send them down. We had this big down move, so at this point, just like a runner, or just like you stretching a rubber band, it got to pull back. So we in that pullback phase where we get a little bit of chop, a little bit of sideways action for a couple weeks. And then I think that we could see some more downward action is possible. There is one stock that I was looking at on Friday. Now I'll throw you guys a bone. Netflix. I do think Netflix has a pattern, especially intraday. I think Netflix intraday wise, if we can get Netflix to break out of this high, we'll call it, what's that? If we get Netflix to break 968, we'll call it. It breaks 968. I do see it going higher to maybe 1,000. That's about 32 bucks. But this is an expensive stock. So I wouldn't even normally talk about this because it's so expensive. Kind of like Costco. You're not buying 100 shares. This is a huge trade. So you got to have a large account. Unless you're doing something like buying, intraday trading or selling a put spread. And even in here, selling a put spread, you can come out here and get wide, maybe sell the 890 by the 885. I would come get a little bit more aggressive. Maybe sell the 910 by the 905, something like that, possibly to try to, get a little trade here from here to here. Uh, and so with that, and then if I put my indicators on, they look even better. You can see right here. See, we got a squeeze going right here on the squeeze indicator. So letting you know it's contracted. We got a little triangle pattern. So you can see you can get everything. Even if I drew it out, let's take these indicators off. I'm gonna draw the trend line. Show you guys the triangle. We get it to break. If we get it to break that trend line right there, might be able to get something, right? So we needed to come out of here, break 968. I think it can run to 1,000, or at least the gap fill. Here's the gap fill right here at 990. So that's a little intraday play for next week. Hey guys, hopefully you got something out of this. Hit the like button, subscribe. Let me know what you trade and let me know what you think. Let me know what you think about what's going on. Do you think the news affects the markets on a global scale, or do you think that the uh, the news trails the market, or the news is put out to basically show you what's happening in the markets? If that makes any sense. With that being said, guys, I'm out. Peace.